Netflix, ticker symbol NFLX. It's one of the biggest names in the streaming industry and the company that help people watch entertainment, TV, sports, everything in one place. It started as a DVD by mail service in 1998 and later expanded to streaming, make it a global habit. Today, Netflix is available in over 190 countries. So anywhere that has internet, it would have Netflix service. And it has more than 30,000 secret codes or like tags that help people, users, find specific shows with some keywords like feel good drama, quirky romantic comedies. They keep inventing or creating different genres for different movies. So if you like any of the reality TV shows, action, adventures, it has it all. It also created its iconic sound, tan tan introduction sound when you turn on. Nowadays, everybody knows that's Netflix. That's incredible. So, what is Netflix doing today? Is it still a buy? Is it still making revenues with its competitors like Google, Disney TV, Amazon TV? Let's take a look at its 3 months outlook. Let's look at its fundamentals first, because if the fundamentals is not a buy, we don't even need to look at its technical. So just picking up some simple criteria. We're not going through its full report, just some simple criteria to determine if it's a buy or not. For example, forward PE, it's at 22. So forward PE is like the regular PE, but forward looking. It's looking at the future. It's based on the future earnings. 22, it's not bad. It's not super expensive. It's not cheap. It's sitting around a good value area. Free cash flow, 11.9 billion, almost 12 billion. That's a lot of money piled in their safety box. They can do more research, they can create more movies, development, so that's a good thing. Revenue growth, it's how much a company's sales have increased over time. We want the company to keep growing. It's sitting at 11.89, so 12%. That's a strong number too. It's not a single digit, it's a double digit growth. PEG ratio, it's price earnings to growth ratio. It's like the regular PE ratio, but add a growth factor to the formula. So it shows whether a stock is cheap or expensive relative to how fast it's growing. Remember, PEG ratio around 1 is fair value, so the PE matches the growth rate. Less than 1 is undervalue, meaning it's at a discount price, maybe investors can get in now. More than 1, it's a little bit overvalued. We're paying a premium for the growth. Netflix is sitting at 1.06, so it's a little bit overvalued, but not that much. It's not that much of a concern. ROE, return on equity. It is how much profit a company makes for every dollar shareholders invest. So it shows how efficient the company is generating profit using shareholders' money. It's at 48.5. That is pretty crazy. I did not know it's doing that much high of the return. For comparison, Micron is sitting at 30 something. So it's more than Micron. That's pretty impressive. And just for reference, ROE below 10, that's a weak reading. Around 10 is okay, but not wow, amazing. 15 to 20 is good. Above 20 is excellent. Also, NVDA is above 20. So Netflix has double the ROE NVIDIA. That's a ton good, right? Alright, so if Netflix is a buy, then let's look at the technicals, where to buy. Looking at the technicals, it is a sad story, that's all I can say. For the whole year this year, yeah, even since last year, November, it's just down below 200 SMA. For a couple days, it poked above and then just gap down. Ever since, it's just sitting down. Well, it was doing so good last year. Look at it. It was all riding, gliding above. It never came down. But they had a bad earning report. So ever since then, it's just swimming down, sinking down, just sitting below the ocean line. But if you like reading chart patterns, you could say this is a double bottom. It could go up after that. Yeah, it's a possibility. Maybe it will stay down here longer, waiting for more buyers to show. So if you want to buy right now, a good entry point is not right now. You think it's cheap, right? It's at a discount. At all-time high, it was at 130. It's almost half off. 70, that would be a good buy. But sometimes cheap markup, there is an issue to it. Like, why is it cheap, right? Why isn't the Wall Street big money investor not buying it? So if you are using 200-day SMA as an indicator, that might be a sign whether buy or not. So right now it's a below. Maybe it's not a good buy point. Doesn't mean Netflix is not a buy. It's just saying right now it's not a good entry point. If you want to buy, a good buy point would be above the 200 SMA. It could be around 100. Once it's poke above and stand above strong. Not like this, just one day and then get down below. Once it stand above, prove its leg, and then we can enter around 100. So that would be a good buy point. Well, some of you might saying that, oh, you're crazy. Why are you buying more expensive stock? Why not buy now? It's just probability. If you buy above 200 SMA, there's higher probability it will stay above and keep going. So sometimes cheap stock, discount stock, there's a risk to it, there's a reason to it. All right, so if 100 is a good entry point, where to take profit? Take profit at around this area, 126. You can see it was consolidating here a lot, right? So there's a lot of pressure, it's a lot of resistance around this area. So take profit around 120 to 125. From 100 to 125, that's a lot of profit that you can make. And don't think about buy and hold forever. What I learned from my personal experience is you miss out a lot of the selling chances. And we don't know what's going to happen in the near future, right? It could have some news. There could be competitors, tariff. Yeah, Trump administration makes some tariff on movies. We don't know. What we know is where to take profit in the near term and move on. There will always be another Netflix stock, NVDA stock. Also, where to cut loose, meaning you give up, you don't want to look at it anymore, switch to a different company. Cut loose would be 95 to 90, anywhere below 95. If it ever come down again and stay down, we don't want to panic sell right when it sink under. We want to watch what is its reaction around this area. Is it trying to go above again, trying to attack and break the line again? Or there's no sign of life, it just keeps sinking under. There's two conditions. If it's the latter condition, then we want to cut loose and move on to a different stock, because it can do something like this. You see, this year, since last year October, it just sit down there and think about the investment money that you could make if you have in Micron, SanDisk, a lot of the different stock. They're just pushing all-time high, right? So have a cut loose point, have a take profit plan. Don't hold forever. Think of a near term. That might be a good solution in the stock world right now because it moves very fast. Where to add and when to add. If you miss the first entry point or you feel like you want to add some more share, 105 to 110, even to 112, this area is a good add point because once it stands above, it has more chance to go to all-time high. All right, lastly, important dates for Netflix. Earnings is coming up in July 16th. Expected move is 10%. Well, what do you think? Do you think it's chance to come up and then poke above and go for all-time high? Or is it gonna miss another, disappoint investors and go one leg below? It could go either way. All right, thank you for watching. I'll see you next time.